Stock Talk. This is your host, Scott. Hope you had a good week of trading. It's been a down market. This war has got everything kind of messed up in the market. The gas prices are going nuts, so everything else is pretty much going down. We've had a lot of rough days here lately. Novavax managed to hit a yearly low today and did pop back up off that bottom. That was a double bottom. So I did like the way it did pop up off that. Almost closed above 70, but it barely got knocked down under that 70 mark. But I wanted to talk a little bit about something different tonight. I wanted to talk about strategies, and we've done this video before, but I wanted to go over it again because when there's markets going on like this, you really got to lean into your strategy, have confidence in your strategy, and because this kind of thing can really shake up an investor, and they can make some bad moves if they just go based off of emotion. So I want to jump over there to that. Let's go ahead and jump over to this presentation here that I've got for us. So the first part of a strategy, any strategy, ought to be buy low and sell high. And there's a lot of people that talk about this, but very few people actually do it. A lot of times they get excited and they buy high when things are going up. One of those things, like right now might be oil, that you see all these oil stocks going up, and you may be, thinking, well, I need to buy some oil, but this, and it might be a good move for a short-term buy. You never know with all that's going on, but any kind of news could change that one way or another. It could go, if Biden was to say something about he's going to turn on the pipelines or anything, kind of good news that makes sense, you would see those oil prices probably drop. So you got to be careful here. And sometimes these oil companies, they're a little strange sometimes, especially refiners. Here refiners' inputs, you got to remember that's the barrels of oil. So even though this oil price is going up, sometimes it may hurt a refiner if they're not being able to keep up with the prices based on gas. But this is the whole thing. A lot of people get excited sometimes and they want to buy things that are going up like crazy instead of buying into these drops. And right now you've got some good drops all across the markets. And these are opportunities to buy low. The only issue is just how low is it going to go? And that's hard to do, but you do want to make sure you're buying low and selling high. Okay. Second part of my strategy may not be your strategy. I am a retired person that no longer has an income coming in other than Social Security. So I may trade different than you. If you're a 25-year-old, 30-year-old, and you got a lot of years left, we may have a totally different strategy, and probably do and probably should have a different strategy than each other. Just based on where we're at in life. So everybody can't do the same thing, shouldn't be doing the same thing as far as how they trade or don't trade, how they invest or don't invest, and just there are some common things, but some of the risk that you take and things like that may be different based on where you are on age and your ability to handle risk. So everything is not going to be the same as far as what I do versus what you do. Next thing, this is very important. Know your stocks. Don't listen to hot tips that you get at the water cooler. Do not trade on those hot tips. Those will get you in trouble. I've done it a few times myself, and it's just, it hardly ever works out. It's best to know your stock, and especially a stock like what we've been trading for the last few years, Novavax, as bad as it's gotten beaten up, you would, right now you would think, well, I may want to just get rid of this thing. But if you know what's going on with the company and you know the company's not broken, and you have these dips like this, you can have a little bit more confidence in holding on to a stock that you may have just really feel like you just need to get rid of. But it's still, that may prove me wrong. But right now, I just feel like I know that stock probably better than any of the stocks I'm holding. But you want to make sure you know your stocks and what they do, where they're at financially. Listen to those conference calls. They're very helpful as well. But you just really need to keep on top of what's going on with your stock. Next, when you make a trade, I like to always do the limit trades. Set your buys, set your sales. I don't like to put a limit sale out there for, an extended period of time because too much can happen with a price. It could go up twice as high as you're thinking sometimes. And so when I do a sale, it's normally a limit trade at the time that everything's moving in the market. It's a specific time when I'm watching a stock and it gets to a certain point, then I might put in a limit trade to sell. Um, Buys, I feel more comfortable putting in a buy at a certain price. It may be a day or two out, but even that, you can get burned on that if something takes a big dip, and you buy it after it goes down $2 and it went down $10. You'll be sick that you bought it at the $2 drop. So I really kind of like to do it real time, but I do like to use those limit trades when I do it even in real time. Next is don't be greedy. The old saying is pigs get fed, hogs get slaughtered. I like to refer to this as pocketing money. You want to you want to pocket money when you make these trades. If you buy a stock, myself being retired, if I buy a stock and it goes up 6-7% in a few days, I'm going to take that money every time just about. Because they go up and down. So I like to get that money as quick as I can get it. Any good trade is a good trade. Your portfolio is going to be going up and down, but if you make those trades, that's pocketed money. That's a realized gain, especially in an IRA account. You don't have to worry about taxes until you withdraw. So I do that a lot in my IRAs, and I really like to shoot for a large amount of pocketing of money throughout the year. I like to pocket at least what I'm drawing out every month. And of course, the portfolios will go up and down depending on whatever the market's doing. So I don't pay so much attention to that as much as I do as my trades. Okay, so that's a good thing to think about. But don't get greedy. Don't get greedy. That's how you get slaughtered. You want to set goals. Set some goals weekly, monthly, yearly. I like to shoot for 6% for yearly. Uh, Monthly, I just like to see some good trades in the month and each week. I like to see, you know, decent gains especially a weekly trade. Maybe, if you can make 4 or 5% in a weekly trade, that's always a good trade. Monthly, same deal. If I can get 6% in a month, that's great. Compound that's a big number. But yearly is definitely a 6% return on any trades I'm making. Also, I'd like to see a 6% increase at least in my IRA as far as the levels go with the portfolio. That doesn't always work out depending on what you're holding at the end of the year. Sometimes it works out great, sometimes it doesn't. But your average, especially if you're retired, you want to at least average something like 6%. Shouldn't be too hard to do. The market's average about 8 to 10. So if you're not doing 6, then you probably need to just put it in an index fund. Uh, don't chase, don't panic. Again, these are just, when the stock's going up like crazy, you have a tendency, and I'm guilty of that. I've done it even this past year with Tilray. But you have a tendency to want to jump on it while it's going up because you think it's just going to keep going. And you'll get burned a lot of times if you do that. Trust me, I'm holding some Tilray right now that I should have never chased. But I'm guilty of these things that I'm talking about here, and that's why you just need to kind of go over this strategy every once in a while just to keep reminding yourself. And don't panic. This is definitely one of those times in the market where people are panicking. They get frustrated. They see this market go down every day, and they see their portfolios go down every day, and they sell good stocks, even though the markets are going down. The companies are fine. It's just that the stocks are getting beat up, and people panic and don't like to see that portfolio go down like it's going down. And I'm in that boat right now. I mean, that's what happens when you have there's markets that get crushed every day. Doesn't matter if you're in the market, you're going to get crushed, and so that's what's happening to a lot of people right now. And the worst thing you can do is sell if you've got good stocks. So don't panic. Be flexible, adjust accordingly. You've got a strategy, but sometimes you want to be flexible with that strategy based on whatever's going on in the markets. So don't just nail yourself down to certain things necessarily, but you can adjust accordingly sometimes. Uh, it's just, it just depends what's going on with a particular stock, maybe, or what's going on in a particular sector, or even the market itself. So you got to be flexible. You may have a goal of 6%, and you feel like this thing may not get to that 6%, so you take your 3% or something like that. But you want to be flexible, not rigid, because the market's very flexible. It goes up and down every day. Uh, Another thing you want to do is you want to monitor your stocks and monitor your results and compare those results to your goals. Uh, I do it daily. That's pretty much what I do most of the day as I monitor my stocks, look for opportunities to trade uh, if the markets are good. Right now is a hard time to do a good trade, but what happens a lot of times in these markets when they're pulling back like this, you'll put in for a trade, you'll get your buy order, and it will keep going down. That's happened to me just recently with Novavax. But I've been able to make a couple good trades on it recently as well. But sometimes you get stuck with your trade because it does pull back further than what you bought at. So you got to be careful in these markets that are going down on these trades. But you want to monitor your stocks. You want to know what's going on with your stocks. Now, some people don't like to look at their portfolios, especially during times like this. So I can understand that. And if you're not much of a trader and it's going to worry you and you're not going to be able to sleep at night, then you may not want to look at your stuff as often. But I like to look at mine, whether it's going up or down. It's something I've gotten used to over the years. Either way, it's a lot more fun when it's going up, but you got to understand that it does go down, and sometimes it goes down big time. So, uh, but monitor your stocks, monitor your results, keep comparing your goals, making sure you're reaching those goals. If not, then sometimes that's where that flexibility comes in. You may want to think about uh, maybe changing the way you're doing things or something like that, or you kind of focus on maybe some of your winners more so than the ones that aren't doing you any good. So, all right. Next is diversify. Whether you diversify different stocks, you want to have different stocks, not all in the same thing. You want to have different sectors. By that, you might want to be in tech versus biomed versus value stocks, commodity type stocks like steel and things like that. You want to spread it out across the different sectors. Uh, and your risk too. You want to, some stocks are riskier than others, and you want to kind of spread that out. You get a good solid blue chip stock versus one of these pharmaceutical stocks like Novavax. Novavax is a very high risk stock, uh, and so that's you got to have that risk tolerance to be able to do a heavy part of your diversity on that. But you just want to spread it out what you're comfortable with and what kind of is a good balance. And sometimes it's not just stocks. You want to also spread it out into things like real estate. Maybe you want to buy a little real estate. Maybe you want to buy some cryptocurrency and those kind of things. Just spread your money out, and that spreads out your risk when you do that. Next is keep a proper perspective on things. Um, and I do that by keeping track of, what my weekly close is and things like that. And so when I have some bad, when I have some bad days or whatever, I will go back and look. Okay, well, where were we this time last week or this time last month or whatever, and you may find that you are back at a level that you were, a month ago or something like that. And so it's not that terrible that you were there just a month ago and you've fallen back to that point. Uh, it's these drawbacks that put you back a year, like what we see right now. These things are putting us back at levels that we haven't seen in a while. So those are definitely uh, something you need to keep a perspective on. One thing that I do, I've got a little app on my phone that's a retirement calculator, and you can put in like your overall amount that you have and put in like a 30-year period and that kind of thing. It kind of gives you an idea of what you can draw each month to make that money last 30 years. And so you want to look at that every once in a while, do something like that to kind of get a glimpse of, when these markets pull back and your portfolio falls thousands of dollars, a lot of times you're only talking about a few hundred per month over a 30-year period. So that kind of gives you a better perspective at what your portfolio is doing instead of getting all caught up in the moment. And so that's what I do. I do it a lot, especially during times like this. You want to keep that perspective, and then also you can adjust if you're doing withdrawals. You can adjust accordingly. Now you don't want to necessarily get where you're adjusting something every month just because it does something. Uh, maybe a 6 month adjustment or a yearly adjustment even, you'll probably be fine. If most of the time these stocks when they go down like they're going down today, you'll see at most a lot of times these things are down a year to 18 months or maybe even 2 years, but most of them are short lived. There are periods of time where you have seen in the past where they're down a lot longer than that, but those are few and far between. And I really think right now with what we've got going on, we're not going to be dealing with something like that necessarily. We could be wrong, but we'll. That last thing is just make sure you're having fun. Um, if you're not having fun, you probably just need to stick your money in a index fund, and there's several good ones that you can buy: QQQ, SPY, DIA. Right now would be a good time to start adding to those probably if you've got money on the sideline. Uh, just start cost averaging in those indexes. It might be a good time to do that. Um, I've got some cash on the sideline. I always keep cash on the sideline, but mine's primarily to live off of in case this thing does last a year or two. So we've got to keep that cash for me, being a retired person. Now, again, that's part of that strategy. But um, just this stock market is an up and down thing, and right now it's a very hard thing to deal with if you're not used to it. That's the main reason I wanted to go over this strategy tonight again, because you got to keep a level head. You cannot panic during times like this. And it's been fun for the last 10 years, 11 years, or whatever. Things have been going up. Anybody can do pretty good in markets like that. This is the markets where you've got to really, it's a gut check to see, can you hang in there and not panic and make bad moves during a down pull like this, a down market like this. So right now, I've taken a pretty good hit this year, so we're going to just ride it out. We're going to see how it goes. Last year we ended up pretty good, beat our average that we wanted to, and the year before that, we've had a great year. So, sometimes they're great, sometimes they're not so great. So that's just something you've got to. It's reality, okay? It's a reality check sometimes, and this has definitely been a reality check. But I just want you to hang in there. If you're trading, maybe you just want to park things for a little while, not watch the market so much during these periods of time. If it's causing you stress, uh, then just best thing to do is not pay attention to it for a little while if it's causing you a whole lot of stress. All right. Well, I hope you have a better week of trading. I sure hope I do. I want to mention today Novavax did make a yearly low, but it bounced off that low. That was a double bottom. Came up pretty good. I was glad to see that. Actually went green for a little while, but the NASDAQ just kept going down, and it just drug it right back into the red before the day was over with. But I'd like the way it stood up, especially compared to Moderna and the market, actually. So Maybe maybe that was a good thing today. When we bounced off that bottom last time, I think we hit that level. We did have a good little run for a little bit, so maybe we'll have the same. But with this war going on, who knows? All right. Well, thanks for watching. If you haven't subscribed, don't forget to subscribe. Click this button right here. We'll be checking in with you later on in the week. All right. Thanks. Bye.